What's up, everybody? My name is Kyle DePepe, and this is my personal finance channel. So today we're going to be talking about what everybody and their mom is talking about, and that's Robinhood. So what's going on is basically GameStop is experiencing what is known as a short squeeze / a gamma squeeze, both of which are kind of taking place simultaneously. And then in the midst of all of this, Robinhood comes in and basically says, you can't trade GameStop. So I think to prerequisite this whole thing, I just want to say that everything I say in this video is obviously my opinion. I'm not trying to give financial advice or anything like that, blah, 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 don't shoot the messenger. But I just want to understand, I want to help you understand sort of market dynamics and what's going on. Now, this isn't to say that Robinhood was right, because I do not think they are right. I think Chamath said it perfectly. At the very least, they were negligent. At the most, they were probably doing something very shady, maybe still are, and maybe even criminal. So let's just put that out there, and those are my feelings on it. I think they screwed over a lot of small retail investors. But either way, let's get into it and let's start to sort of break down and understand what's going on. So the first thing is that people don't understand the market. They don't truly know what's going on. And it's just crazy when you see comments on some of the videos and people speak about these things that they just don't understand it. So let's start from the beginning. When you transfer money to Robinhood, right? So the other day I was seeing messages and even headlines from the media saying that you couldn't buy like even Dogecoin, right? So that's not even a stock. That's a completely different like thing. But the point was, when GameStop got like halted, or like, not halted, but you couldn't trade it anymore. People were like, oh, buy Dogecoin. You can buy Dogecoin, right? It's not one of the stocks that's being stopped. And it's because it's a cryptocurrency. There's no clearinghouse. It's not going through one of the exchanges that all the stocks trade on. It's a completely different thing. But people couldn't buy. Now, it's not that they couldn't buy. It's that when you transfer money to Robinhood, a lot of times what happens is they'll just say, okay, you can trade with half of the money that you're transferring in, like an instant deposit, right? But Robinhood doesn't actually get that money till usually like 2 to 3 business days probably, because there's some sort of settlement or clearing that happens, right? It's like when you make a bank transfer. Your money doesn't just pop up into the other bank's bank account right away. Maybe it does if you're at your own bank, but if you're going from like Wells Fargo to Capital One, the money's not just there and available in a split second. That's not how it works. So it's the same thing when you're transferring money from your bank to Robinhood. They're giving you the benefit of the doubt, right? Like, they have, obviously, there's some sort of connection there between the bank, but what they're saying is if I transfer $2,000 into my Robinhood account, they're giving me $1,000 available as an instant deposit to trade with before the other $2,000 is fully available. Okay, so keep that in mind. And it wasn't that they weren't letting you buy Dogecoin, it's that they were waiting for your funds to fully settle, meaning completely transfer, not an instant deposit, but fully transfer from your bank to Robinhood before you could buy with the full 2,000 buying power, right? So they weren't not letting people trade. It was just that they were saying, okay, you initiated a transfer, but until that money settles and clears, you can't buy or sell anything, right? Okay, so let's just get that out of the way. People don't understand that, and it's just a very simple concept of most bank transfers take T+2, or I guess that's trade +2, but think about it as 2 to 3 days before the funds show up. So now let's go into what T+2 is. So when you trade a stock, the settlement period is T+2, typically, which means trade day, the day you trade the stock plus 2 days, that's when it settles, right? So I don't know if Robinhood does a great job of displaying this, but in my Fidelity account, it says like settled or unsettled funds, or funds available to trade. And this is basically cash or cash equivalent, whatever you want to call it. It's cash in my brokerage account that's available to trade, right? And when you sell a stock, typically that cash that you get from that trade, it's not there yet. That's why I'm saying cash. You sold that stock. That transaction has to settle over that T+2 period. Once it settles, now you have the cash in your account and you can technically trade on it. Now, what some of these brokerages have been doing is they allow you to trade with that money early, right? Because they said, oh, you bought the stock, you sold it, we know that, so we're gonna allow you to trade with this cash ahead of time. Or sometimes they'll do a percentage of that cash, or sometimes you have to wait for the full T+2. So while those funds are settling, you can't just buy again with that stock. So I know a lot of people may not have seen this ever, but when I was growing up with the E-Trade baby commercials, back when I was like 18 and had my first brokerage account, I was paying like I don't know, $8 or $9 commissions, and you had to wait basically 3 days from when you sold a stock to when you could buy something else, even if it was the exact same stock, because of that T+2 settlement period. And people don't understand this even, or don't know that this happens behind the scenes. Okay, so now that we explained that, let's get to capital requirements. So the CEO of Robinhood went on to CNBC and said, we don't have a liquidity problem.
It sounds to me, though, that you're suggesting that there was a liquidity problem inside the firm.
No, there was no liquidity problem.
However, that is exactly what they have, a liquidity problem. So similar to this like T+2 settlement period that we experience, that goes to what is called a clearinghouse. And that's what's sort of come up in the news. So Robinhood Clearinghouse went to them. This was in an interview that Elon Musk actually was asking him on Clubhouse, I think last night at like 1:30 in the morning Eastern time. And I think his name's Vlad, the CEO of Robinhood, was saying that their clearinghouse came to them and said they need capital requirements of $3 billion in order to basically keep doing their normal operations, which they didn't have. Therefore, they have a liquidity problem. So they were able to talk that down to, I think, like, I don't know, 700 million or $1 billion, which is what they had to raise. So they raised $1 billion from investors in order to solve that liquidity problem. So now he's saying they don't have a liquidity problem because they raised that money, but they didn't really raise enough to then be able to freely allow people to trade like GameStop, AMC, whatever it is, Nokia, all those meme stocks, whatever you want to call them, freely, because they didn't have enough liquidity to provide capital for the capital requirements to their clearinghouse, right? So the reason they have to do this is because if someone who's buying or selling, whether it's from Robinhood or another brokerage, right? If I want to buy GameStop and then someone from another brokerage sells it, well, that clearinghouse, their job is to make sure that I, as a buyer, have the cash to buy the security from somebody who is selling it, and they make sure that the person selling it actually has the security, right? That's what the clearinghouse does. Now, because GameStop was so volatile and the price went up so high and the swings were $100, $200 intraday swings in the stock, they were basically saying that, hey, if we run into a situation where someone's trying to buy stock and someone's trying to sell stock, and you don't actually have the cash to do so, or they don't actually have the stock to sell to you, then that falls onto us, and we don't want to take that responsibility, so we're going to bump your capital requirements, which means Robinhood then has to deposit more money in order to allow that and basically allow the risk of there potentially not being one side of the trade, whether it's the stock or the cash. So you might say, well, why did Robinhood do this? Well, there were actually other brokerages that did this as well. Webull, E-Trade, Interactive Brokers, they all either completely didn't allow opening of new positions, meaning you could only close out or like sell your position, or they had limited buying, right? Like maybe you could buy a share or 2 shares throughout the day, which is kind of dumb. But either way, there were a couple other brokers that this happened to too, all of which basically had a liquidity problem where they had to have higher capital requirements, which they didn't want to fill. So instead of filling and putting up another $3 billion in cash, they just said, you can't buy any more GameStop, right? That was their solution, which isn't a good solution. It doesn't lead to a free and open capital market. It doesn't lead to free and natural price discovery. And that's obviously a problem. That's why a lot of people are upset. Now, obviously there's some questioning as to whether or not this should be allowed, I guess. And you know, this liquidity crisis, which now the CEO technically, in my mind, lied about on CNBC. They did have a liquidity crisis, even though they said they didn't, blah, blah, blah. But the point is, go to a brokerage where you're not going to encounter that. For example, Fidelity, they're a bigger brokerage. They have more cash flow. They've been in business for years. They have the money. And I could go in and buy and sell as much GameStop stock as I wanted during this whole thing, whereas on Robinhood, you couldn't. And that's because of the liquidity crisis that he lied about. So that's the reasoning for why that happened. And that's still basically what's going on. It's so volatile that the clearinghouse is basically saying, hey, you got to put up more capital in order to do that. Now, you might be thinking, well, I deposited $2,000 into my account, so just have Robinhood show them that I have $2,000 and I can trade it, right? It doesn't work like that. Robinhood is not allowed to use customer deposits as capital requirements for that. It's not allowed, meaning they just have to have liquid cash to put up as a capital deposit. And that is why, even though people have deposited money into their accounts, Robinhood can't take the customer funds and use that as a capital requirement deposit. So that's why you still run into those issues. So based on this is why I would say that at the very least they were negligent. They were negligent in the fact that they didn't disclose this. They didn't actually say what was going on right off the bat. There was a lot of confusion. And there's also that weird relationship with Citadel. And this is also why you get to, well, negligent at the very least, but there's probably something shady, something weird, something maybe even criminal going on, and there's just bigger problems at hand, right? And there's so much that goes into the market on any given day that people don't understand. That this is also why in other videos I always stress, always use a limit order. And this partially goes into the fact that Citadel has a relationship with them. Citadel pays for order flow, right? So Robinhood came out as this first like free brokerage, free no commission trades on stocks, trades on options, free brokerage. And the reason is because Citadel pays them for that order flow. So when you go in and place a market order, Citadel front runs your order. So they'll buy the stock a penny below it and then sell it to you at the new market price and make a penny on every single trade that comes through Robinhood. So they're just printing money because of this, right? They can front run your orders effectively. Now that's a whole different discussion. That's high frequency trading and all that jazz. We're not going to get too far into that. But the point is, if you use a limit order, instead of saying, say a stock's trading at $100, and you say, okay, well, I want to buy a share, market order, let's go, right? Well, what's going to happen is they're basically selling that order flow to Citadel. Citadel might be like, okay, well, if we buy it real quick at $100, we can just sell it as a new market price for $100.01. So now at your market price is $100.01. That's what you get filled at. So instead of paying $100, you paid $100.01. So Citadel just made a penny off of that one trade. Now, if hundreds of thousands of people are doing that on Robinhood all day, they're making hundreds of thousands of pennies on all of these little trades potentially, right? So the point is, if you use a limit order, could they still front run your trade? Maybe, but the point is you're not going to pay more than your limit. So if the stock is trading at $100 and you say, I want to buy it at $100, and that's where the market currently is, well, Citadel can't front run that and then charge you $100.01 because you had a limit order at 100. So even if Citadel tried to front run you and say, oh, we got an order coming in, we're going to buy the stock real quick. Oh, it's a limit order at 100. They have to sell it to you at 100. They can't mark it up to 101 penny. So I'm not even going to get into whether or not that's how they were doing it, but the point is place a limit order, because if for some reason the market were to spike because of news or something else completely irrelevant, and the stock were to jump to $150 immediately on some news headline, and you get filled at the market price of now $150 instead of $100 because as you were swiping up to place your order on Robinhood, it jumped to $150. Well, if that news headline was fake and it goes right back down to 100, you just lost 33 1/3% of your money, right? Because you just bought it at 150 and then it dropped right back out. Whereas if you placed that limit order, you wouldn't have gotten filled, but you would have gotten filled when it came back down to 100. So always place a limit order, and that also helps get rid of this whole, oh, my order is being front run. It could be, but at least with a limit order, you know that you're not going to pay more than the limit price. Now, if you want to make sure you get filled right away, effectively placing a market order, you could just say, oh, I'll pay 101 for this stock because I think it's going to 150, 200. So that one point I don't really care about, but I want to make sure I get filled. Just place your limit order above where it's trading and you always get price improvement. So fun things to know, but a lot of people don't even know that the market works this way. I guess that kind of goes to the point of free isn't free, right? Like, yes, it's free on Robinhood, but that's because they're selling your order flow to Citadel. Now, the last thing I'm going to get to, which is crazy that I guess people just don't understand this, which I guess makes sense. Citadel isn't trading on Robinhood. You're trading on Robinhood. You're trading on Robinhood, Fidelity, E-Trade, Interactive Brokers, whatever it is. Citadel isn't using one of these brokers to place their trades. I mean, I guess they could be, but they're not. They probably have a direct feed to the exchanges and are just trading on the exchange. It's a very different setup that these hedge funds have. Even as a prop trader, when I was a professional trader for 2.5 years, it wasn't like we were trading on Robinhood. No. We had like split second, could enter orders within a couple milliseconds. These high frequency trading firms are doing it even faster because it's all computer driven. We were doing it manually on keyboards, but I mean, we could see the whole order book. We can see every exchange that these orders are getting placed on, whether it's ARCA, NYSE, NASDAQ, whatever exchange these orders are being placed on and executed. We can see all of that, and they can too. However, on Robinhood, you probably can't. I think you can pay for level 2 data, but still, You're never going to be as fast as the big guy. High frequency traders are always going to beat you, and they're not buying and selling through Robinhood. So when you say, oh, they won't let us buy, but Citadel can go out and buy and sell as much as you want, well, technically you could probably go to Fidelity and buy and sell as much as you want, but they're not using Fidelity and Robinhood to place their orders. They're not going into their phone and placing an order for this kind of stuff. They have a completely different, like, direct feed to the exchanges, and that's how they trade. So when you say, oh, Robinhood's just locking us out and they're letting everybody else trade, no, they're not trading on Robinhood. They're buying Robinhood's order flow and then basically placing the trades for Robinhood in some situations. But these other hedge funds like Melvin Capital, they're not buying and selling on Robinhood. So Robinhood has no direct relationship with Melvin Capital, right? Like it's not like they're a client or anything. So when people don't understand this, like it's a crazy realization for some of these people, but these hedge funds aren't on their phone apps swiping up to place an order on Robinhood. That's just not happening, right? So once you understand this and understand that there's this sort of whole other entity of people and exchanges happening, like a relationship that's not going on to Robinhood or Fidelity or E-Trade to place their orders, they basically have a direct feed to the exchanges. Like you'll start to realize like you're just getting screwed over as the little guy. So I think the biggest takeaway here is buy Bitcoin. I half kid, but I half don't. The point of Bitcoin is that you don't have a clearinghouse. Yes, there's still exchanges, which makes it easy to sort of get on, right? Like Coinbase. You can deposit US dollar, buy Bitcoin, but you can move Bitcoin to your private wallet. There's no clearinghouse. Typically, these exchanges wait for a certain number of transactions to happen on the blockchain, but there's no clearinghouse they go to. So typically they'll say like, okay, after 5 transactions happen on the blockchain, we'll solidify your order and make sure that the Bitcoin is in your Bitcoin wallet on our exchange. But you can take your Bitcoin and put it into your own private wallet and then do transactions with other people not using a Coinbase, for example. So Bitcoin is effectively getting rid of all the problems Robinhood has sort of stirred up over the last couple of days of capital requirements and clearinghouses and limiting your ability to buy and sell. If you go to something like a cryptocurrency in certain situations, you don't need all these intermediaries. There's no financial regulations around it right now. You can buy and sell it all you want. Obviously, there's tax implications and things like that, but it's obviously a much more free-flowing system and natural price discovery that's happening with something like Bitcoin, rather than trying to buy and sell a stock through a broker like Robinhood that has to go through a clearinghouse that gets traded on an exchange. And it's just, there's so much nonsense going on, and the little guy's always going to get screwed. And that's how I sort of came out of the professional trading that I did. You realize how much you get screwed as the little guy, even doing as much as you can at home. If you don't have that direct feed, you're always going to get beat by somebody else. Now, it's not also obviously the end of the world, but you might lose out on a penny or two, and that adds up to the people doing a lot of trading. But you trading on Robinhood, you may not care. So I hope that was helpful. If you have more questions, leave them in the comments down below. But the point is, Robinhood screwed up. At the very least, they were negligent. At most, they're doing something shady and criminal. They definitely have liquidity issues. And I would, I guess, just say if you want to keep trading stocks, maybe go to something like a Fidelity. They have no commission trades on all stocks now, but you do pay a little bit with options. However, you get to trade GameStop when you can on Robinhood. So if you want to keep trading freely, go to a big boy, right? Fidelity has the liquidity. They can clearly post the liquidity so that you can keep trading all you want. So, we'll see how this plays out. We'll see what happens, but be careful out there. Use limit orders and go to a Fidelity or just buy Bitcoin. Either way, hope this was helpful. Hope this was informational. If it was, please hit the like button. That way more people see this. Share the video if you want. If you have any questions, leave them in the comments down below. Hopefully I didn't misspeak too much or say anything wrong, but I could have, and I apologize. Again, this is all my opinion. I don't want to try and give financial advice or anything like that. Just trying to shed some light on how sort of these brokers and exchanges and hedge funds all operate, because it's just crazy. Either way, that's going to be it for this video. Hope you enjoyed it. Again, hit that like button, subscribe to the channel, and until next time, thanks for watching.